You think investing is hard. No. What's hard is realizing the game changes completely. The strategy that works with $500 can destroy you at $5 million. The mindset that helps beginners grow can make rich people lose fortunes. And almost nobody talks about this because investing has levels. 8 of them. And every level changes the rules. Different risks, different opportunities, different mistakes, different psychology. So the real question is, what level are you playing at? Because the move that gets you to the next level is never the same move that got you here. This is where almost everyone starts. Confused, overwhelmed, staring at numbers that feel like another language. You finally open your investment account, and suddenly, everything feels intimidating. Green numbers, red numbers, charts moving, people online yelling, buy this, sell now, crash coming. And honestly, you have no idea who to trust. Then comes the moment. You deposit your first money, maybe $100, maybe $500. Not life-changing money, but enough that it matters to you. Enough that losing it would hurt. And now something strange happens. You stop seeing companies the same way. That coffee shop, public company. That phone in your hand, public company. The store you shop from, public company. For the first time, you realize you can actually own tiny pieces of giant businesses. That idea changes everything. Because investing stops feeling imaginary. It becomes real. You make your first investment, and suddenly, you care. You start reading, watching videos, learning terms, stocks, ETFs, dividends, market caps, S&P 500. Some people talk about getting rich fast. Others talk about holding forever. Some are gambling. Others are building. And without realizing it, you're making your first important investing decision. What kind of investor are you becoming? At this level, returns barely matter. Seriously, your gains are tiny. Your losses are tiny. That's not the point. The real goal? Learning. Understanding how markets move. Understanding fear. Understanding patience. Because investing teaches something nobody warns you about. Sometimes, doing nothing is the smartest move. You stop checking prices every hour. You stop panicking over small drops. You slowly begin understanding. Investing isn't reacting. It's staying. Staying long enough for time to work. And once you understand that, you stop being a beginner. You become a participant. Welcome to level 2. Now things start getting serious. Because you stop investing randomly and start investing consistently. This is where discipline begins. Every month, money goes in. Not when markets feel good. Not when headlines are exciting. Every month, $100, $500, $1,000. Whatever your budget allows. Rain or shine. Fear or confidence. You invest anyway. This changes everything. Because now, you're not gambling. You're building. You start buying smarter. Maybe index funds. Maybe ETFs. Maybe companies you researched. Your portfolio slowly takes shape. Not emotionally. Strategically. And then, the market punches you in the face. Because eventually, it drops. Hard. 10%. 15%. 20%. And suddenly, fear becomes real. This is the moment most people quit. They panic. Sell everything. Promise themselves, investing isn't for me. But something changes if you survive this stage. You realize something powerful. Volatility is normal. Prices move. Fear spreads. Markets panic. Then recover. Again, and again, and again. You learn something called dollar cost averaging. A fancy term for something simple. Keep investing. No matter what. Market up. Invest. Market crashing. Still invest. Because you stop trying to predict the perfect moment and start trusting consistency. That mindset quietly changes lives. Because while everyone else reacts, you're accumulating month after month, year after year. And suddenly, you stop thinking in days. You think in decades. Now your portfolio starts becoming meaningful. Now the game shifts. Level 3 begins. This is where investing finally feels real. Because your portfolio crosses serious territory. Maybe $50,000. Maybe $100,000. Maybe more. And suddenly, A small market move matters. A 1% gain? That's real money. A strong year? Thousands added. Without you working extra hours. Without overtime. Without burnout. For the first time, money starts working beside you. And that feels different. Very different. You begin understanding a word rich people love. Compounding. At first, it feels invisible. Slow. Boring. Almost disappointing. But then, you notice something strange. Growth starts speeding up. Because now, your money earns money. And that money starts earning money too. This is when smart investors change how they think. Emotion matters less. Systems matter more. You create structure. Maybe 70% stocks, 20% safer investments, 10% cash. You rebalance. Not emotionally. Strategically. Stocks rise too much. Adjust. Market crashes. Buy more. Because now, you understand something beginners don't. Fear creates opportunity. You stop asking, how much money can I make? And start asking, how much risk am I taking? That question changes everything. Because at this stage, protecting gains matters too. You care about taxes, long-term investing, reducing unnecessary mistakes. You become calmer, smarter, less emotional. Because success isn't about finding one magical stock. It's about consistency. Again, and again, and again. And when your portfolio becomes big enough, tiny improvements suddenly become massive. Welcome to level 4. This is where investing becomes optimization. Because now, you're managing serious money. Maybe $250,000. Maybe $1 million. And suddenly, small improvements matter. A 2% difference? That's thousands. Sometimes tens of thousands. Every year. Now you stop thinking like an investor and start thinking like a strategist. Risk matters more. You diversify differently. Stocks still matter, but not alone. Now you look at real estate, fixed income, alternative assets, different ways to protect and grow wealth. You ask smarter questions. Not, how high can this go? Instead, what happens if I'm wrong? That mindset protects fortunes. Because experienced investors know something beginners ignore. Big losses hurt more than small wins help. You think about downside, worst case scenarios, tax efficiency, portfolio balance. You stop chasing excitement. Excitement usually costs money. Instead, you chase durability, stability, consistency. At this level, investing feels less emotional and more mathematical, less guessing, more systems. Because now, you understand something dangerous. The bigger your money gets, the more expensive mistakes become. And eventually, a strange thing happens. Doors begin opening. Opportunities regular people never even hear about. That's level 5. Cross 7 figures. And the financial world changes. Fast. Because suddenly, you get access. Private deals. Exclusive investments. Opportunities hidden from ordinary investors. Not because you became smarter. Because your capital became larger. Now people bring deals to you. Private equity. Venture capital. Real estate syndications. Private businesses. Things not listed on stock exchanges. Sounds exciting. But here's the catch. Higher reward usually means higher risk. And patience. Lots of patience. Some investments lock up money for years. 5 years. 10 years. No quick exits. No panic selling. No emotional decisions. Now, you evaluate people. Not just investments. Who's running this deal? What's their history? Can they actually execute? Because bad management destroys good opportunities. You hire professionals. Tax experts. Financial advisors. Private bankers. Not to think for you, but to help structure complexity. Because wealth becomes harder to manage. Not easier. And this level teaches something fascinating. Making money and keeping money are two completely different skills. Many people get rich. Few stay rich. Because access means nothing without good judgment. And eventually, investing stops becoming a side activity. It becomes serious. Very serious. Welcome to level 6. This is serious money territory. $10 million. $50 million. $100 million. Now, percentages feel heavy. A bad decision, millions lost. A good year, millions gained. Every move matters. This is no longer casual investing. This is capital management. You stop chasing trends. You stop listening to hype. Because hype becomes expensive. Very expensive. Everything becomes measured. Risk, liquidity, time horizon, expected return. Every dollar has a purpose. Public stocks for growth. Real estate for income. Private equity for upside. Safer assets for stability. Everything has a role. You think like a portfolio manager, not an emotional investor. Performance becomes measurable. Benchmarks matter. Efficiency matters. You compare decisions. Analyze outcomes. Improve systems. Because now, winning big matters less. Avoiding disaster matters more. That sounds boring. But boring protects wealth. And something strange happens here. You stop asking, how do I make more? And start asking, how do I lose less? Because recovering from massive losses takes years, sometimes decades. And eventually, your decisions grow so large. They start affecting other people, entire industries, entire sectors. That's level 7. Now we're talking about power, real power, hundreds of millions, billions. At this stage, you're not picking stocks. You're allocating capital. Huge difference. You think bigger. How much goes into technology, healthcare, private markets, real estate, credit, global opportunities? One decision can move massive money. Now, you don't just invest. You influence. You fund companies, support industries, shape trends. People follow large investors because capital creates momentum and relationships matter more than ever. Information flows through networks, fund managers, executives, private firms, major institutions. You perform deep research, not surface-level opinions. Fee structures, risk exposure, long-term incentives. Everything gets analyzed. Because mistakes here cost fortunes. Liquidity becomes complicated too. You can't just click sell. Large positions take planning, timing, coordination. Because moving too fast moves markets. And suddenly, you realize something shocking. You're no longer participating in markets. You're shaping them. But there's one final level. The rarest level. The level almost nobody reaches. Level 8. This is where investing changes completely. Money is no longer measured in millions, it's measured in influence. A normal investment could be hundreds of millions or even billions. You don't just buy shares anymore. You buy ownership, control, entire companies. And when you make a move, markets react. But with that power comes pressure. Moving billions takes strategy, patience, and private negotiations. Deals happen behind closed doors with CEOs, major investors, and institutions. At this level, investing stops being about returns. It becomes about influence shaping industries, companies, and where the future goes. But here's the truth nobody tells you. Most people are obsessed with level 8. Billionaire status, massive wealth, private jets, power. But they ignore something important. Every billionaire investor started at level 1. Confused, scared, unsure, with small amounts, tiny investments, big doubts. The difference? They stayed in the game long enough. Because investing isn't about being perfect. It's about surviving, learning, improving, staying patient, and understanding something most people never do. The goal isn't getting rich overnight. The goal is leveling up, one stage at a time. Because wealth never arrives all at once. It compounds, quietly, slowly. Then suddenly, everything changes.